the Federal Reserve has commenced tapering. That means they're buying less securities every single month. Going forward, what are some things that I need to be thinking about, and what are some things that I should be doing? Let's talk. Welcome back to Key Talks, guys, and today in this video I'm going to be talking about what the Federal Reserve is planning on doing going forward and how I'm changing my portfolio and the things that I'm taking action on to make sure that I'm making the right decisions. So the Federal Reserve announced earlier this month that they're going to begin tapering the pace of its asset purchases later this month. So on a monthly basis, the reduction will be about 10 billion less in treasuries and 5 billion less in mortgage-backed securities. There were also just a slight change in the Fed's view on inflation. The post-meeting statement kept the word transitory to describe price increases that are running at a 30-year high, though it qualified the term somewhat by saying pressure are expected to be temporary. Now, the chairman, Jerome Powell, said he expects conditions pushing inflation to last well into next year. So what is this article saying? So this article is saying that the Federal Reserve is continuing to prop up the stock market and pretty much all assets. They're continuing to buy these mortgage-backed securities and bonds every single month. However, they're buying a little bit less this month, and they're going to continue to buy less and less every single month. So what does that mean? That means there isn't going to be a huge crash. There isn't going to be a sudden shock in all of the markets. But instead, because everything's already been propped up and they've seen numbers that they want to see in employment, what's going to start to happen in the market is slowly things are going to start to balance out. So the way it works is whenever the economy is down and the Federal Reserve comes in to prop up the market, the reason they do this is if the economy is down here and the markets get pushed up, then eventually there's enough money in the system, in the market, so then hopefully the economy will slowly start to go up, and then eventually they'll meet at a median right here together. So that's what the intention is of the Federal Reserve. Of course, that's not really what happens in reality. It's more like it gets propped up all the way here and the economy goes up a little bit. But that being said, that's just an opinion of mine, right? What should you be doing and what am I going to be doing? Well, I'm not a financial advisor. I can't really tell you what to do, but I can tell you what I'm doing. And one of the things that I'm doing is starting to take profits. So clearly they're not stopping anything that they're doing. They're continuing to prop up the market. That means things are still going to go up overall, the S&P 500 and everything. But at the same time, you see some of the richest people right now taking some profits, like Elon Musk, like Jeff Bezos. Even in the All In podcast, they were talking about that when Chamal said how these people were starting to take profits. And if you haven't taken profits since 2020 and you've been in the market and you've seen significant gains, this is probably a good time. Now, this doesn't mean that you should sell everything because remember, the Federal Reserve is still in the market. They're still propping up everything. So of course things are going to continue to go up, but how much will it go up? How high will it go up? Well, no one can tell the future. I don't know. You don't know. And anyone who tells you this is, a certain commodity or a certain stock or an index or whatever is going to hit this price by this date is probably just lying to you because it's a guess. So the first thing is taking profits. Well, what else can I do, right? If I'm taking profits, I can't just leave it in cash because if you think about it, the Federal Reserve literally printed about 40% of all US dollars in circulation since the pandemic. So then keeping that money in cash isn't really going to be helpful. So my plan or what I'm going to be doing is simply just looking at the numbers when I make my investment decisions. So earlier in 2020, it didn't really matter what I was investing in because everything was propped up, even if it was, overvalued. But as the Fed, starts to taper down, it's going to start to matter more and more and more. Now, the way I see it, now I'm starting to take value more seriously. And I'm cutting down on my Tesla position significantly, and I still have some, but I'm cutting down, and then I'm getting into stocks like Alibaba because they have strong revenue growth, right? Their PE is great. They're not overly diluted, and if you look at the PS ratio, it's pretty low. It's like 3, even though like they made $119 billion and the market cap is only about $300 billion. It should be close to like $800 or $900 billion market cap. Now, outside of the stock market and outside of taking my money and investing it into like these value stocks, I'm also going to be diversifying into real estate, but not the type of real estate that you see in everyday not the type of real estate that you see everyday people making. Instead of just going, into a big city and buying things and overbidding for them, my plan is to stick to the basics, stick to the simple things, go far away, find out where the cash flowing markets are, and in those cash flowing markets, try my best to find a property that will cash flow, pretty much. So those are the type of things I'm doing, taking numbers more seriously and taking value more seriously. Now, this kind of diversification for me is going to give me a lot of safety and comfort. Why? Because I have no conviction in leaving my money, just based on the fact that the Federal Reserve is propping up the market, especially now that they're starting to taper. It's just too much of a risk for me. So what I'm doing is moving some of these monies out. But the fact that I'm taking profit doesn't mean that now I hate a certain stock or like I still love Tesla, the car, right? Even though the stock may be slightly overvalued. And yes, I know a lot of people argue with me saying that, well, 10 years from now, they're going to make a certain amount of money. They rather dollar cost average. And yes, that is true. That's a great strategy to take. That's just not a strategy that I want to take right now. And I'm more risk averse, and I'd like to diversify. And those are the things that I'm looking at. So to recap, taking profits and diversification into cash flowing markets or stocks that have value. That's where I'm putting my money, and those are the strategies that I'll be following. Thank you guys so much for watching this video. I really do appreciate it. Please like this video. It really does help me. My goal is to reach 1,000 subscribers in this channel, so hit that subscription bell as well and that notification bell so you don't miss another video from me. Thanks for watching, guys. Take care.